Hey traders, investors, and stock market enthusiasts, it's your boy Jeremy Alexander Newsome, your cerebral pyromaniac. I'm ready to get your brain fired up with this edition of a real life trading video. Enjoy. Thanks so much for watching. You rock. Hey traders from around the world, what's going on? It's me, Jeremy Alexander Newsome. Trust you had a stupendously serendipitous week. It is most importantly Friday, the day where the market is closed for another 2 days. That's pretty much what's going on. Relatively exciting stuff. A lot of things to talk about. Let's hop into a review together. We have here in front of us the SPY, and the SPY, beautiful S-curve right here. A lot of people have been asking about the S-curve video that is coming out tomorrow. We're going to be posted on YouTube, and I'll email it out to everybody. So keep your eyes on the inbox for that. So this is a new all-time high, right, yesterday. And that's probably when all the newbies were hopping on, right, with new volume, thinking this is the time that's confirmed. This is now bullish. So at this point, you had 3 white candles in a row, and it makes sense that we get another, pullback and another dip buying opportunity, right? Nice little S-curve. I mean, we've seen it before where it makes a new high only to pull back, right? Makes a new high to pull back, makes a new high to pull back, makes a new high to pull back. That's just kind of the market. So anyway, Robert Falco had a put sale expiring today at 287. That was going to expire worthless. Good job, Falconium. And that is the SPY. I don't really have any day trades to show you because it didn't take any day trades today. In fact, early this morning, 7:36 Central, 8:30 Eastern. I said 97% chance I won't take any day trades today. It's going to have to be a perfect if I do. If I do, I won't lose on it. And then Ron says, so you're telling me there's a chance? Yeah. Anyway, great episode, great clip. But no day trades today, so just kind of ending flat on the day. Did have a few options kind of do their thing. We're going to talk about that. In fact, let's go look at those right now. Here's Micron Technology. Tons of traders most likely getting put some shares of MU today if you did a $45 put sale expiring today. That was a 63 limit. Now the reason that's good is because if you do the math, 45 minus 0.63 equals 44.37. So that's actually the dollar cost average, which is lower than where the stock is right now by about 30 cents. So getting kind of a deal on the stock. And from here, most likely on Monday, Tuesday, some traders will just turn around and sell a covered call. Probably around the $52, $53 area for October, because getting exercise up there would be like $8 a share return. I mean, not really that bad at all. Now, as far as the downside is concerned, the earnings were really good on MU. I liked them a lot. They're making money. They definitely are getting impacted and affected by the Chinese tariffs. But you have what could be a good argument for head and shoulders pattern. Do you have a close of the neckline? Do you have a little bit of retest? So the bullish volume that came in, my thought in theory is if it takes out the low of that candle, specifically with a close below $42.98, probably would be a wise idea to buy some protective puts, see if MU could trade down to about 37, 38, sell those puts for a gain, and look to maybe buy another 10 or 12 shares or 13 shares of MU at that low and just see if it can bounce again, because my theory is MU is probably going to be choppy for a bit. It's going to be in a distribution phase, bouncing around, chopping around, because you had such a strong move. I mean, here's Micron on a monthly, a non-dividend paying stock, but it did make a new high. It did break through some of these resistances. If I draw a resistance line like kind of like this line right here, support resistance, you can see that we've closed above here, closed above here, closed above here, and really we're just kind of retesting that level. If anything, this could be just an easy 1, 2, 3, 4, and this 4 wave is going to be very choppy, and eventually we'll get into a 5. How long will that take? That part I don't know, but just be cautious, be patient. I wish it paid dividends, but that's okay. And then here's Square, ticker symbol SQ. And Square closing above 85 today. Whoa. Now this is another cool one because with an $85 covered call and getting 82 cents worth of premium, that gives you the ability and more or less the dollar cost average that you sold your shares at 85.82, which is actually 52 cents higher than where it closed. Not too bad. So in this particular situation on Square, congrats. If anyone bought some shares a while ago and kind of rode that wave up and started selling calls along the way and finally got called away for a good gain, That's wonderful. Tons of traders selling puts down here and down here on Square. And since this one is most likely going to get called away, I think that's a good plan if anyone wants to buy Square lower, because this weekly chart looks a little on the extended side. Nice one black crow evening star reversal at an all-time high. So if Square goes a little bit lower than 83.33, which I think it could, I would love to see a pullback, even if it is just the 20 EMA, which is 71.70. I mean, I think that would make sense. I think that would be a good dip buying opportunity. Not saying that's going to happen, but just saying if it does, right? If we do get a good pullback, long term, without question, it will be a really good buying spot. But in this particular juncture, love the trend, love the move. I'd love an area down here, and that's also what a lot of traders are doing. So if you can get called away at 85 to then buy back again around 70 and then turn around and repeat the process, I think that's a pretty good deal. Here's Netflix, NFLX, and Netflix is just really super choppy right now. I would just suggest waiting on this one, being as patient as you can, and probably selling volatility would be a decent way to play Netflix, because it's been really, really choppy. Just bouncing around all over the place. It seems to me that I still think it's going to roll lower, and my good buddy George is in a 455, 275 naked strangle for November week 1. And I think that's a pretty good price and a strangle on Netflix. But I do like the overall move. It's still battling with this trend line you can see here in purple. The weekly chart, if I just hide all the drawings for a second, the weekly chart got a high wave candle, so a pretty decent indecision candle. And I think whatever it does next week, or at least the week after, if it closes above or below this candle, I think it's going to go in that direction for a little bit. And you all know that I had that wager with everyone on Netflix that it hits 300 before earnings. Now, again, I could be easily wrong on that, and hopefully I am for anyone who isn't bullish on Netflix. But at this particular juncture, I'll keep a close eye on it, see what it does. Looking for it to break down a little bit lower at some point. But just selling like a giant iron condor, or selling a strangle of some kind, or a bear call spread, bull put spread, condor type of flavor, might be best just to take advantage of some of the massive volatility as Netflix just chops around. Some of the official swing trades here at Real Life Trading, we got Macy's, ticker symbol M. And personally, I was actually looking for Macy's to go down, and even though the entire market pretty much was pulling back today, Macy's did not. So Macy's did not go lower. This one was a really solid bearish gap and go. And you had an inside day candle here on the 18th of September. That's kind of what caused me to set this trade up. And you had a lower shadow here, lower shadow here, lower shadow here. And in fact, this move right here did go lower than the low of this candle. Here's the weekly. And I mean, you did get a bearish candle on a weekly. We did get a almost perfectly shaved top candle this week, 2 pennies away from a shaved top. So just kind of fingers crossed that Macy's might drop a little bit lower for those in those put positions. You're in between the long-term moving averages on the weekly. In the daily chart, you're actually below the 100, and you're below all the moving averages, and they've crossed bearish. So you're going in with a trend on most time frames. We'll see, right? Decent amount of volume, relatively okay, upper shadow. If we get any kind of pullback or selling, maybe Macy's will get affected. But we did get triggered into a trade on Twitter, which was down today. And the good news about that is my buddy Brian, let me go see if I can find Brian's trade. This was really solid. So Brian, where'd you go? Here he is. So Brian at 10:47 a.m. Central said he crushed Twitter today, and this was his trade setup. So the very second candle was that high wave bullish candle. Once that broke down, he did a really good trade on that one. So good job, Brian. And the cool part about this one is it actually gapped down on Monday. This was our original entry, 29.81 by 31.52. And on Monday, it gapped down below our entry. And I was like, man, should I cancel it? Should I leave it open? What should I do? And it was a black candle gapping down, made it a retest gap. And on the 17th, I mentioned I was going to leave it alone all week and see what it does, and that's what I did. So shout outs to Ben for helping me stick with that plan. So pretty much this one just retested an S-curve right into the 10. This area price right here is the 20 EMA on a monthly. So my biggest question is to simply try to discern how much to exit there. If I exit like a quarter or a half or all of it or something smaller than a quarter. But here's that weekly chart. So the weekly chart, I mean, looks fairly good. There's not a whole heck of a lot holding up Twitter until it gets down to maybe 25 and some change, like 200. So we'll see. I'll probably end up exiting like a quarter there, and then another quarter at the 200, and maybe the rest down here at 23.79. That'd be a cool trade. Anyway, bearish on Twitter. We'll see if that continues. I do like the volume. I like the candle. I like the moving averages. All that looks good. Another one is Car Gurus, CARG. Very nice pennant pattern on Car Gurus with some bullish moving averages, so fingers crossed that that one pops higher. Marvel in the money on this one, barely. This one had an inside day candle with increased volume today, and it's also sitting at the 100 simple on a weekly chart. This is kind of my note to myself so that I can understand what I need to do from here. And the other one is Alaska Airlines, ticker symbol ALK. So Alaska, pretty decent trend. I mean, I know it's a little bit of an upper shadow. I like the volume today. I like the moving averages. My note is to leave it alone from here until 927, because really it's just going to all come down to if I need to lock in any gains or not for September, which it looks like I probably will end up taking this one off the table next week on Alaska Airlines, just to lock in some gains. But that 20 EMA hasn't even really been hit since we entered the trade. So if it does pull back and bounce, you know, could hold it for a little bit longer, but I'll probably end up getting out next week for about a 2.5 hour gain, and that'll probably be it on that one. The other two that I had that I wanted to look at, and I think that were requested, is DocuSign, DOCU. So DocuSign, this one's been doing some kind of fun things, and what we have here on DocuSign is a theory that my buddy Tejas and who was the other gentleman? Vinny Patel. So both those gentlemen, we were talking about at one point like a channel regression theory, which is when like a stock broke out of a channel or support and resistance, and it came back to that same, same pattern, that it could break out the exact same size only to reverse again. So I'm watching for that to happen on DocuSign. I don't know if that will occur. I can say it's actually a pretty decent morning star pattern though, and it is coming into a support level. Of that, I am sure. So here is the hourly chart, and even if it doesn't make a lower low, which is fine, hourly doesn't look awful. So if you start making some higher highs and breaking that 53.36, you're more than welcome to start keeping your eyes on DocuSign down here for a bullish move. And last but not least for today is T-Mobile. Bringing this one up, I'm not going to personally take a trade on T-Mobile. I just simply don't trade phone carriers for no other particular reason than I'm just weird. But here's the weekly chart. And this one is breaking out of a distribution phase. So you'll notice that T-Mobile is making new all-time highs. If we really zoom out, right? So this is kind of like the T-Mobile chart. So it's breaking out. It's got a pretty decent wave structure. And this could be a fun trend to just simply keep your eyes on. So the daily chart, you had a really nice bullish move here with some of the earnings and Sprint news. Kind of a nice little S-curve, nice little pop. So it's a good trend, and sometimes that's just one of the most important things to do is just find a really good trend, and I think T-Mobile is in that realm, just like Nike, right? Nike was another one that I found that was breaking out of the distribution back in here. Had tons of people ask me, hey, Newsome, what should I do on Nike? And I was like, either buy, or if you're in shares, just keep holding. This was the Colin Kaepernick gap down, and anyway, nice little bounce there because it was, just why not? Good buying opportunity, nice strong trend. So this is what happens when you get a good trend, like Nike, is you get opportunities to buy the dips. When you get a good dip, you get a little pullback into weakness, you buy it, and I think, I know earnings is around the corner again on Nike, but something like T-Mobile might start shaping up to be a little bit of a decent trend for you. One other stock, actually, I want to celebrate another trader, Cheryl Mall, had a put sale down here at 24 for September 21st. And that's expiring worthless for her, along with numerous other put sales she had on some medical marijuana stocks. Folks from around the world, well done. A challenging week. The first week of September was pretty challenging for me regarding just trading in general. I'll be sending out the Nashville trading retreat video and montage, like compilation, sometime on Sunday, I believe. Pretty sure I can do it on Sunday. But yeah, I'll be sending it out over the weekend, and the reason I'm just bringing that up is because, well, number one, it was an amazing time, and number two, there was a lot of great traders that I met, and it was not a challenging moment for me for the first week of September because of that. It was just trading-wise, A lot of charts are being really weird the first week of September. Second week of September, phenomenal, which was last week. This week was a little bit below average. It was all right. It's kind of like the Browns. No, not quite that bad. Anyway, congratulations, any Browns fans, for you guys getting a win for the first time in 635 days. Folks, you're amazing. You rock. I will see you all next week, and I'll send out a few videos this weekend. And until then, love life, live life, and trade it. You rock. Bye.
Hey, you made it to the end of the video. Thank you so much. I truly appreciate it. If you like that video, click that subscribe button and click this one right here because you're going to absolutely love that video as well.